Welcome to our weekly Forex forecast, and this is for trading for the week of August 12th to the 16th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, so we will start off by taking a look at our calendar here. So in terms of our what's coming up here, three things we have to keep in mind. One is the central banks are actively cutting rates. So when central banks cut rates, the currency goes down. So keep an eye on that. Right now, it's a race to the bottom for all the different currencies. So just be aware of that because it will have a negative impact on the currencies. Secondly, Brexit, concerns regarding Brexit. UK has been preparing for a no-deal Brexit now with the new government. So if you hear comments in regards to that, any kind of no-deal Brexit comments are negative for the British pound. So we could see an impact from that. And anything that talks about an agreement being reached will be positive for British pound. Third thing that we have to keep in mind right now, US-China trade relations. They have been retaliating against each other. The talks have fallen apart. If we hear more negative comments about situation escalating and they playing tit for tat, that will be bad for our equity markets, and we could see negative impact on Australian dollar, New Zealand dollar, and positive impacts on safe haven assets. Okay, so now let's get into what's coming up. Business confidence numbers for Australia will be, if they come in positive, it should be good. But if we see negative numbers here, it will have a worse impact on Australian dollar there. Okay, so employment numbers here. These are very important numbers. So these numbers for the pound will be similar to the non-farm numbers that we see for US. So very important numbers. If we see that the average earnings index starts to drop, that generally has a negative impact. So this is a key number that we have to pay attention to. And of course, if we see a big drop in the employment numbers, that could also have a negative impact. But the average earnings is a very, very important number that we usually see that if it drops, it has a negative impact on the British pound. But if it comes out positive, it could push the pound up. Inflation numbers here, CPI, these are inflation numbers. This is one of the core things that are numbers that the central banks pay attention to. They've been trying to push the inflation number up because banks like to keep it at 2 to 3%. So if we are seeing it go down, that would be negative for the US dollar. And then we have employment numbers here, wage price index, which is similar to our average earnings index for the pound we just talked about. If this number is declining, that will have a negative impact on Australian dollar. Then we have CPI number, again, inflation number, yearly inflation number for pound. Inflation number has been good for UK so far. So if we start to see this number decline, so already we are expecting a slightly lower number. But if it's negative here or lower than this one here, we are likely to see British pound drop. So then it will start putting pressure on Bank of England to cut rates as well, because Bank of England has not moved yet. And any negative numbers then will start adding up and it'll put pressure on Bank of England, and market will start expecting them to cut rates. All right, and then we have further employment numbers out of Australia. So again, very important numbers we need to pay attention to. And then Thursday here, we have retail sales numbers for British pound here. Again, any negative numbers will have negative impact here. This one here for the US, we have Philly Fed Manufacturing Index. These numbers are quite important. So we need to be careful with these ones. Right now, US dollar is at an interesting place. So the US-China trade relations have not helped the US dollar. We actually saw a US dollar drop as a result of the escalation in the kind of the negative situation with the US-China trade relations. So if the numbers again keep on coming to the downside, now this will put additional pressure on Fed to cut rates. So President Trump has already been saying that Fed needs to be more aggressive and we need another rate cut. So this way, market will start pricing it in, and we are likely to see US dollar drop as a result of that. And on Friday, we do have some US numbers here. They're not as important, but ever since the first financial crash, their building permits and housing start, these numbers have become more important. So they can move the market, especially when there's nothing else going on in the market. And also keep in mind right now in August, we are dealing with low liquidity conditions in the market. A lot of traders are away. And as a result of that, there aren't the same amount of orders in the market. And what happens is a smaller order, generally an order that would not have the, that would not be able to move the markets before, when everything is full liquidity or under full liquidity conditions, can now push things around. And that's why we tend to see reactions that we generally don't see. For example, New Zealand, the other day, last week, I think it was New Zealand, Reserve Bank of New Zealand cut the interest rates instead of quarter point that the market was expecting. They cut it by half so 50 basis points, so half a percentage point, which was unexpected. It just threw everybody for a loop, and we saw New Zealand dollar drop, and especially Euro New Zealand went up like crazy, and Pound New Zealand went up like crazy. So overall, it had a really negative impact on New Zealand dollar because this was so unexpected. And of course, there was low liquidity conditions, so market went up like crazy. New Zealand dollar dropped. So these things can happen during low liquidity conditions. Usually, it would be a surprise cut, and there would be a reaction, but generally it would not be this big of a reaction. But under these kind of market conditions, when nobody's really there, then we tend to see these exaggerated moves. All right, so let's go on to the charts now. So we'll start off by taking a look at our euro dollar here as usual. Okay, so here we are. So we have seen a price go up in the euro dollar here. So at this point, we are trading in this range still. So price had dropped right into the support level that we had looked at last or the week before. And now it has gone up. Usually this pin in the bottom shows rejection of the support here, and we saw price go up. So right now our bias is slightly to the upside here. So price could go up further here. Let me just bring this back here. Okay, so we still have room to the upside, but do keep in mind we are into resistance, support resistance currently where price is right now as well. But there's definitely room to move to the upside here into the top of these candles. So I would say bias here is bullish. I would be careful though. We are starting to see these pins, and if you take a look at a smaller time frame, for example, if you take a look at our daily, we see that price is kind of stuck in this little range here. For the entire week, price is traded in this range. Now, what's interesting about this range is that we do see price making lower highs, which means it's sort of trailing to the downside. And generally, we see in this type of a triangle setup, we tend to see that price will break to the downside generally. However, the interesting thing here is that it is holding above this previous support resistance level here, and it's holding below this previous resistance. So it is in between right now. And if price does not break to the bottom like this is what I would expect. If it does not do that, chances are very high we could see a break to the upside and price could go higher. So keep that in mind. I was looking for a breakdown. It hasn't happened yet. And sometimes we find when price does not break down, when it looks like it wants to and doesn't do it, it can go in the opposite direction. So be careful with this one because it could go higher. So this move here could continue up higher to the upside. So that's something to keep in mind. But from a weekly perspective, this is bullish and we could get this move higher. So first target here is basically 1300, 1.1300. And if it goes above that, it could go all the way into 1.1420 level, all the way into the top here. So for now, a bias is bullish and I'm looking for price to move higher. But keep in mind, take a look at that daily and see how price breaks. Because if it doesn't break down, it's likely to go higher. So for now, though, bias is bullish here. Pound has been dropping with all this Brexit stuff we have been hearing. It has been negative for British pound. Last week we were looking for a drop, for the last 3 weeks we've been looking for a drop and we've been getting those. So bias is still bullish. Bias is still bearish here. So next target is fairly close into a 1.1980 level here. So for now, bias is still bearish. Now, keep in mind that it's been selling off for a number of days here. So we could have, we could get some bullish moves here, right? If price comes into support, it could get pushed up because of this selling that's been going on for several weeks. However, based on the technicals here, this does look bearish. So next move is to the downside. And in terms of our support, we are into these levels that we haven't seen in a long time. So bias is bearish. And then we have this big move here that actually went up fairly quickly. But this entire room here, the move that could get filled. So for now, first target is 1.1980. And then I will look at the 1900 level and 1800 level below that. So bias is bearish for pound dollar. Aussie dollar here, Aussie dollar has been interesting. We saw a big drop when New Zealand dollar dropped and we saw that interest rate cut. And now we have a large pin in the bottom as a result. Interesting thing here is prices right into this resistance, the support turning into resistance here. So if it doesn't go through this level, we could see it drop. However, based on this pin here, this looks like it could move higher. But like I said, the important test will be, can it break through this level at 0.6830? If it doesn't break through, I will look for price to drop. But for now, bias is bullish. And once it breaks through, then only then am I looking for price to move higher. That will be the first target. And then we could see price go higher. So in terms of our targets, bias, I would say, is bullish. Again, that's the contingency there. And first target here would be 0.6920 and then 0.7050. But if it doesn't get through this, then we are looking for a further move to the downside. New Zealand dollar, this was the move that I was talking about. We had a huge drop as a result of Reserve Bank of New Zealand cutting rates. Then we did see this move come back and get filled fairly quickly here. But now, as we can see, prices into this support resistance level, 3 times price had come into this level and then it had bounced higher. Now it's having trouble going through it again. So at this point, bias is still bearish, but there is this rejection that we saw. So price could move higher. But again, because it's into this important level of support and resistance, if price does not get through this 0.6490, so let's say 0.6500 level, then we're likely to see price drop further. So for now, I would say bias is bearish. I would keep an eye on this 0.6500 level. If it doesn't go through, I'm looking for a drop. Now, should it go through, then we could see price go into this next level here, which is 0.6600. But until then, I'm looking for price to move lower here. So bearish bias for New Zealand dollar. Dollar CAD here, this one has been all over the place as well. we saw a move upwards here, and now we have a pin. So bias here is to the downside. However, it can still go up. So in terms of a pullback, we could get a pullback into this level here and then like a drop. So this here support resistance level is a good one to look at for a potential pullback, and then looking for a drop. So bias here is bearish for dollar CAD. And again, to keep in mind, if it doesn't break the low, it can again go back up. So that's a very important thing to keep in mind right now, because most of these seem to be at important support resistance levels. So for now, bias is bearish. First target is 1.3100. Second target, 1.3020 for dollar CAD. Euro pound here, this has been going up because British pound has been very weak as a result of the Brexit comments that we've been hearing, or developments that we've been seeing. So last week we were looking for a move higher. We got that, and this is still looking bullish here. So our bias is bullish, but do keep in mind we are into resistance here. So this is important support and resistance level where price has struggled previously. So keep that in mind. If it doesn't go through it, then we could see trouble. But for now, this is a very solid candle close into the resistance though. So bias is bullish. Next target is 0.9420, then 0.9580. So bullish bias for euro pound. Euro Swiss franc here, this one has dropped. So we got a pullback, and then now we have a drop. Bias is still bearish. Next target is fairly close here, 1.0840 level here, and then further we're looking at 1.0780. So bias is bearish, but again, this one is very close into support here. So this could happen because when price was here, as we can see, it used that level for a further move to the upside. So we could get a bounce here as well. So keep that in mind. That would be the only note of caution there. But bias is bearish, and we're looking for a further move to the downside. Pound Swiss franc here, because British pound has been so weak, we have a drop in pretty much all the pound crosses. The only thing that was weaker against the British pound was New Zealand dollar because of the rate cut. But otherwise, British pound has been weak. Last week, we were looking for a move lower. We got that. So bias is still to the downside here. So I will look for a bit of a pullback into 1.1790, so about 1800 level, and then a further drop here. And then we have this entire move that's open that could get filled here. So bias is bearish for our pound Swiss franc, and next target 1.1600, and then we have a lot of room to the downside and price could drop further. Dollar Swiss franc here. Okay, so with this one here, bias is bearish as well. Last week we were looking for a drop. We got that drop. So still looking for a further move to the downside. But now keep in mind, we are into the support here. Price bounced last time it was here. So we could get a push to the upside. So be mindful of that. But otherwise, bias is bearish. And first target would be the bottom of this move here, 0.9695, so 9,700. And then we're looking at 9640. And then further down, we are looking at 0.9580. So bias is bearish for dollar Swiss franc. All right, let's take a look at yen crosses now. Yen has, with the US-China trade negotiations and all of that going on, yen has been stronger, so yen crosses have dropped, especially pound yen here. Nice move to the downside, which we were expecting from last time here. Now bias is still to the downside here. Next target is 124.80, but we are coming up into support here into 126.20 level, so be cautious here. but overall bias is still to the downside. So any kind of positive comments that come, any kind of positive comments that come out of US China, I would kind of keep an eye on those. If they talk about, wanting to talk again, that will be positive. But if we start to see more comments that are negative, that they are basically tossing things at each other, that will be negative, and Japanese yen could strengthen again, which means the yen crosses could drop. So make sure we are paying attention to our news as we trade, because things have been very, very volatile lately with different stuff that's coming into the market. So all these external forces with Brexit and US China and Iran is in there. So just be careful and keep an eye on the news feed. That's very important right now with the volatility we have in the market. So anyway, so bias is bearish, 126.20 first target, and then we have 124.80 as the second target for pound yen. Euro yen here, this one has been interesting. We did get a pullback and then a drop. So at this point, price opened and closed at exactly the same point for euro yen. So because pound has been selling, we find that when British pound sells, then or one of those, either euro or the pound, is selling aggressively, the other one tends to go up. And this is why we have seen euro pound go up. So right now they're kind of holding the euro, and pound is in this free fall, but things could turn around. And as soon as the pound selling stops, euro could drop, or again, if euro starts to go higher, those euro pound and the pound are related. So any aggressive selling in pound tends to push euro up. So just keep that in mind. So for now, with this one here, that's why euro is being held right now. It hasn't been as bearish. With this looks like a doji right now. So indecision at the moment because it opened and closed at the same point. Overall, though, bias is to the downside and is holding below the previous high, previous low here. So as a result of that, my bias is still to the downside, but I would be cautious with this one. But this is what I would expect. So bias would be bearish. 119.20 is the pullback level, and then 117 and then 116.20 will be the two targets to the downside. So bearish bias here for euro yen. Pound yen, dollar yen has dropped as well. And let's take a look. So last week we were looking for a drop. We do have that. It's into support now, so just be careful. See how we had a nice bearish candle close right into support and then it moved up. So I will be careful with that, but bias is bearish for now. 104.60 will be the first target. And if it does drop below that, then we're looking at 103.40. So bearish bias here for dollar yen as well. And we could get a pullback here all the way into the bottom of this candle here. Let me just pull this lower into 106.50 level. So keep an eye on that. But otherwise, bias is bearish, and this is the move I'm looking for. 104.60 first target, 103.40 as the second target here. Aussie yen has also dropped. We were looking for a drop, so we did get that drop, and now we are very, very close to the support here. We did see a pullback because Australian dollar did recover after that drop. With New Zealand dollar, when New Zealand Reserve Bank of New Zealand cut the rates, we saw Australian dollar drop, Canadian dollar drop, and New Zealand dollar, all three of the commodity currencies dropped altogether, and then it did pull back. But this is still bearish here. And what I would look for is maybe a retest of this previous level at 72.50. And if it stays below, then I will look for a further move to the downside to test the bottom here at 70.50. but we are into some levels that we have not seen for quite some time. So we are all the way into this level from September of 2008. So have not seen this level in a long time. So be cautious here because things can turn around. But for now, bias is bearish. 70.50 is the first target. And below that, we're looking at 68.20. Actually, prior to that, 69.50. So let's go with that one first. So bias is bearish here for Aussie yen as well. New Zealand yen, this one, there was a big drop here when they cut rates. Now it's pulled back, and we're looking at a daily chart here. So we see that price is holding below this previous support resistance level. So as long as it stays below this 68.80, we are likely to see a further drop. So bias here is bearish for New Zealand yen here, and there is more room to the downside. So bearish bias, and we could see it go down all the way into 66.80. All right, so let's see, what else do we have? CAD yen, and then we'll go into okay, you guys, you want to stop your video. Okay, next here we have CAD yen. CAD yen, same thing here. It's just been trading in this range after that big drop here. And now it's still holding below this 80.20 level. If it holds below that, it's likely to go further. So bias is bearish. And first target here is 79. And then below that, we have 77.80. So bearish bias here for our CAD as well. And we could get a pullback, maybe a deeper pullback here. So watch out for that, something like this, and then a further drop. But bias is bearish for CAD yen as well. 79 and then 77.80 will be the two targets. All right, so let's get into our commodities here. We'll start off with silver. So this is a daily chart. This is the big move we got to the upside in silver. So this is looking bullish. So this is actually similar to or somewhat similar to the euro chart that we were looking at previously, where we had a move to the upside and price was consolidating sideways. And then now it's broken to the upside. So just to kind of, draw that comparison, this can happen in euro as well. So just be mindful. But for now, bias is bullish here for silver, and it has broken out. It's dropped since then, but we could this is the move I would look for. Bias is bullish for now for silver. Do keep in mind, though, we are into resistance right here. So this is where price had gone and then dropped quite a bit. So if it doesn't get through 17.36, then we could see a drop here as well. So I will look for a move into 17.36, which is our first target. If it doesn't get through, we could get a move to the downside here. However, we could. This is kind of what I'm looking for, but there's a lot of stuff going on in the market that can change direction. A lot of external stuff like US and China being the biggest one. Then we have the Iran situation as well. So those things can change the direction here. So watch out. So if there is uncertainty in the market, this is likely to go up. But if, let's say, US and China decide to have another round of talks, then this one could drop here. But for now, bias is bullish. Gold, same thing here. We saw this big move to the upside. Right now, it's consolidating sideways, but bias is still bullish. This is the range it was trading in for the longest time, several weeks here. And now we have seen that move higher here. So with this one here, bias is still bullish. And so this is where we are. And again, we haven't been into this price since 2013. So bullish bias still. and our next target is to the upside here. So we could get a pullback into 1488. And if it drops through this 1488 target, it could go all the way into 1450. So keep that in mind. But bias is bullish. First target will be the high of this week, which is 1510, and then 1540 is the second target for gold. So this is looking bullish. Oil here. Oil took a hit when we saw the trade tension, the comments about US and China. Oil dropped because China is a big consumer of oil, right? So when there are problems like this, that's basically what market is expecting, that the Chinese economy will go down, which means, well, both US and Chinese economies are likely to go down as a result of the trade wars here. But in relation to oil here, because China is a big consumer and with trade tensions, market then starts to expect that Chinese economy will drop, which means they will not need as much oil, and then oil prices start to drop. That's what we saw. And we have seen the equity markets recover over the last couple of days, and therefore we have seen the oil recover as a result of that. But here we are, we had a big drop here in oil. So with this one here, I would keep an eye on this daily chart to see how price does here. Right now, we are into this resistance. So we had seen a drop, a pullback drop, and now it's moving back up. It went right into the support level here, and now it's moving back up. But it's into this support resistance level here. So if price does not go through 54.80 level here, then it could turn around. But right now, looks like this one could go further, all the way into 56. And if it crosses that level, then we have room higher up there as well. It could go all the way into 58, 58.80. But for now, the level that I would watch would be this one right here at 54.80, because if it doesn't go through, it could turn around. This is an important support resistance level, and we have seen this getting tested several times. So here, right here, here, and now it's to the other side here. So it could get stuck here, just like this one. It could get stuck and come back down, and we could see consolidation, just like we saw in this area here. We could see a similar thing develop here as well. So we have to just be careful with this one. But if it goes through here, then it's very likely to go into this 56 level, which is again an important support resistance level. But if it goes through this one, then we have room all the way to 58.80. So this one, just keep an eye on it. In terms of move, I would say I would err more on the bullish side, but I would be very, very careful with this one. Copper here, copper has been bullish, but now it's into the support resistance level. And this is where we need to see how it reacts. So as we can see, a lot of these commodities, different Forex pairs, they are into important support resistance levels. And we haven't seen some of these levels in a long time. Others, they are just important levels that we have to pay attention to. So now is the time to really, focus on these things and not just be flippant about it, because as we can see with low liquidity, things have been going slightly crazy. So just be careful. So here, I would say bullish right now. If it gets stuck below where it currently is, below this week's low, it could drop. But for now, I would say bullish, and I will look for price to go into the next level at 2.59. And if it gets through that, into 2.63. So slightly bullish bias here for copper. Bitcoin, again, I do not have the latest chart here for Bitcoin, so I suggest you check that out. But based on this last week's move here, this is, again, what we saw with the euro dollar. This is what it's doing. It had a move up. Now it's consolidating sideways. If it doesn't drop through, then we are looking for another move to the upside, which will be 12,800 would be the next level. But again, my charts do not reflect the price action over the weekend, so I would check that out. One point that I would like to make about the Bitcoin is that Bitcoin is starting to act kind of like gold, like a safe haven assets. So I've noticed that when equity markets are going down, Bitcoin has started going up. So there is that relationship that is starting to emerge with Bitcoin. So if the equity markets drop, we could see that opposite reaction in Bitcoin. So just keep that in mind if you are trading Bitcoin or if you're interested in trading Bitcoin. So let's move on to the equities here. Equities have been interesting, huge drop here. And then we have seen this move to the upside, leaving us with this big pin to the downside here. So this shows rejection of the bottom, which means price could go higher here. However, we could still see price come down. So it could start consolidating here. Like I said, markets have been very, very volatile, a lot more volatile than we generally see. Summer is usually a volatile period because of low liquidity, but right now we have this US-China stuff going on, which we normally don't have. So the markets have been more volatile than normal. So just keep that in mind. Oh, so thank you here. So this comment here saying Bitcoin fell 700 pips yesterday. So looks like that could drop further here. So I would just keep an eye on this here. Keep an eye on it on the latest chart. Okay, so markets here, it's an interesting position right now. It's in between, big drop, and now we are in the middle here. So this one, I would say I'm neutral on this one because I think it could go in either direction. We could just start consolidating here, or if we hold above this 2870, we could also see price go all the way up. Markets right now are just being driven based on sentiment more so than anything else. So it could go in either direction here. But we have seen that recovery of that move to the downside that we were seeing. So now with everybody's wanting to devalue their currency, President Trump is putting pressure on Fed to cut interest rate further. US dollar has not been doing so well, which is what President Trump wants. He wants the US dollar to get devalued. So there's a lot of pressure on Fed. So if the numbers from US keep coming out negative, we are likely to see an interest rate cut in September, or at least the market will start expecting one, which means we are likely to see equity markets go up as a result. But for now, my bias here is neutral. I would see how price reacts in this area. We could see a drop like this, and like I said, and then a further move higher. But I'm not looking for a big drop at this point, just potentially maybe some pullback, and then target would be 2960 here for S&P 500. NASDAQ here, this one, same thing. We had this big drop. Now that move has been filled, and this is looking a little bullish right now. So price is consolidating here, and we could see this move higher as well. So a bit of a pullback, and then a further move to the upside. So I am a little bit slightly bullish on this one. Again, not heavily bullish by any means, but I'm not heavily bearish either. So more on the neutral side, but I think we could see something like this here as well. So slightly bullish for NASDAQ as well. DAX here, we saw a drop, and then this is completely neutral here. Price opened and closed at exactly the same point. This gives us a neutral bias. I will look for a further move in this area between 11,900 to 11,500. So just going sideways here. FTSE here. FTSE has been pulling back here as well on the daily. We did have this big drop here. So overall, though, this one is showing us a pin bar as well. So this one could go higher, but we are into resistance here at 73.50 level. If it stays below this level, it could again turn sideways here and just go like this. But we have a large pin here. If it breaks through, we are definitely looking for that move higher in that case. So all the equity indices have been a little, they have been all over the place right now. So we have to give markets some time to align themselves because they're being driven by sentiment at the moment. So Nikkei here is looking bearish, but we are into support, and this is where price had turned last time. So this one as well, this one's slightly bearish, but again, I will look for this sideways move because I think we are due for a sideways move. We have seen a sharp drop. We have seen a sharp rise again, and now we could see sideways move in the equities as the markets take a breather and really try to figure out what's going on. But if it breaks through the bottom here, then we have room to the downside for it to drop. So my bias is slightly to the bearish side on Nikkei here. All right, so that's all I have. And if you guys would like to download the spreadsheet that comes with the weekly analysis, you can go to tradingwithvenus.com/forecast, and you can find, you can download the forecast from here. If you're already on my list, then you will get it in your email automatically. But if you are not, and if you would like to download the spreadsheet, just go to this one. You just enter in your information, email address, and it will come to your email. So that's all for today. Have a great trading week, and I will see you next Sunday then. Bye for now.